Yeah, welcome to Open Source Trading with AJ. So if you look at the watch list here, you will see we are looking at the Swiss pairs. So we are going to be looking for trading opportunities on the Swiss pairs in the month of April. But before I go into that, I need to explain to you why I call this an open source trading. It's because the signals are free. These are like signals in real time. And then also these are free. And then we follow up with them in the group, whether they play out well or they don't. So in the last 2 months, we've been swinging a trade in CAD CHF and then also AUD CHF. Basically, we've been trading the Swiss pairs to the downside, their strength. So this month here, we would possibly be looking for their buying opportunities or their weakness. And before I could actually continue, let me just show you exactly what we did in the last. So this is the trade card CHF, and then we also had other trades in AUD CHF that we traded. So these are not just random trades that I'm showing you. These are actually trades that we took. So let me just show you exactly. This is the trade in the month of February. This is the signal. The group is here, thrown, so you can always check it out. Thrown, and then this was the trade in the month of February. But better still, I had also shared it here. You can go to the YouTube, and then you will be able to find. You just scroll down. You come here to Achuk. You scroll down to these last videos here. You will see it like this one here. This was the video explaining exactly these trade entries that we've had uh, on CAD CHF and then also AUD CHF. So this is the reason why I call it open source trading. Now with this, in this month here, we have to look at the next move for the CAD pairs because the direction is clear and we just want to I want to get these trades correctly. So now the next thing is last week the market has been so volatile and people thought that the market has changed because of uh, we had the tariffs which were released, the reciprocal tariffs like USA releases and then the other countries also reciprocate, and that is what has actually made to the volumes. And people have come online and saying that the markets have changed. No, the market do not change. What actually happens is that there's just more volume in the market, meaning if you are wrong, you will be wrong quickly, and if you're right, you will make a lot of money. So these tariffs here, they are not an indication of market change, rather they're an indication of volatility. So this makes it one of the best time to trade for swing traders. And this is why we are able to hold trades for like 2 months and make money collectively. Okay. So with that being said, let me just focus on this month and how we are going to trade these Swiss pairs. Okay. So you can see here. So let me just start with Swiss. So I usually look at the bigger time frames. And now the reason why I look at the bigger time frames is because your practical time positioning right now, it is maybe in the year 2025, in the month of April, and then maybe on a Sunday, the day is Sunday, the first week of April, and then the fourth hour. That is your practical time positioning. So you cannot ignore the yearly time frame, the monthly time frame, the weekly. You have to incorporate them, especially if you're a swing trader. And then while you do that, you need to follow certain principles. The market is not some kind of a random thing. The market is really, really, really very principled. So let me just show you one principle that I actually incorporate in my trading. And I show you the tip of its iceberg, not that deep. So the principle of balance. So I'm going to use the principle of balance to explain to you the next direction for the Swiss pairs. So in the principle of balance, it's just you noticing that the market is centered. And by that, I mean the market does not move randomly. The market goes up so that it can eventually come down, and the market drops so that it can rise. That is what the principle of balance is in simple terms, meaning now that the market has actually dropped, it is time for it to rise. And the reason why we are looking at the rise is because this is an all-time low. At Swizy is here at an all-time low. So let me just use this. It is an all-time low. Remember, this is the yearly candle. So when you come to the monthly chart, let me just show you this principle in practice. So this principle in practice is here. If you come to each time price has dropped lower, it rises. So this is the first, these are the lows. So you realize this is the low, and then we had a rise here. This became the next low, and then we had a rise. So this became the low, and then the rise. And now we have a new low here. So we are looking for that. That is done with the reflex to the principle of balance. So now once you have this, we can now begin to scale to lower time frames. So let's come to the weekly time frame because the weekly candle has just closed. Okay, I need to wrap up these things. So the weekly candle uh, has just closed. So let me just show you how we are going to start our trading from here. So remember, we are at an all-time lows. Okay, so you just need to move on from this because this is where we got the trades to the down. Now we're looking for buying opportunities. So you can see clearly last week was very bearish, and then it printed a new low here. Now from this new low, when we come to our lower time frame, let's say the 4 hour, this is what we shall want to see. So this is exactly how we are going to start trading. So at the lows here, you don't want to jump into trades anyhow. What you want to do is you want to allow the market to give you a pattern, a double top or inverted head and shoulders, and then with that retest, then you can do that. So it could be a triple top, an inverted head and shoulders, and then when it breaks to form a new high, and then we can take trades on the formation of the new lows that will fail to push price to the downside. So this is the pattern we're looking for on CAD CHF because it has come to an all-time low. As long as we don't see this pattern here, the market can continue to come down, but eventually it will appear or it will range. But this is what we have now, CAD CHF. And of course, once the signal is ready, I will be able to drop it in the group. So you want to stay watching the group. That is where you will get them. So now going on to the next pair, that would be, let me just pick AUD-CHF. And the reason for that is because this pair is also at an all-time lows, and we are very much interested in it. Okay, if you look at the yearly, I explained already your practical time positioning. So this is the yearly low, an all-time low. So now, what does that mean? It means that the market has only has a room to further go up. And for that to happen, we will look at patterns. There are certain patterns that we need to incorporate and look at those patterns for us to be able to trade. So I can come to the weekly candle and look at how bearish the weekly candle is. So what we want to see is that continuous push to the downside, a pattern, and then we can take the buys up there. So you can easily see that maybe on your lower time frame, smaller time frame like the 4 hourly. And that is what we want to see next because it answers that principle of balance. And then maybe lastly, I could actually pull up another pair, but I think these ones will do. But this is what we want to do. For the whole of this month, we'll be looking for Swiss weakness and take advantage of that. And just one more thing, people tend not to trade these Swiss pairs, but if you understand Switzerland as a country, its geographical positioning and how it is also currency is a safe haven because of the good economic policies and the political environment that is in that country, it becomes easy for you to trade them. It is their currency is actually considered one of the safe havens. That's why you see most billionaires and millionaires they have Swiss bank accounts. Those stories you watch in movies, they're actually practical. Switzerland has a neutral stance in terms of politics that if you study the wars in Europe, you realize that this is one of those European countries that has not been invented by fierce guys like Napoleon or any other guys. They have always been having a neutral stance when it comes to politics. So that makes their currency good. When you see economic uncertainties, you see the Swiss currency strengthening. And now of course, after strengthening, it weakens a little bit. So we want to take advantage of the weakness. So this is why the rest are here. You can analyze them on your own, but I've given you two. We'll see how they play out next week. So watch out in the group. We'll